Yeah, my name's Peter Tompkins. I've been at Downer for around nearly 11 years and the leader of Spotless for nearly 3. Now I'm going to talk to you a little bit today about what we do, the markets where we do it, why we think we have really good positions with our customers, and some of the other observations that reflect the journey that we've been on. So just a little refresh here. Facility services really for us includes hard FM, and when I say hard FM, what I'm really talking about trade and technical based services that we either deliver ourselves or with subcontractor delivery partners. We also do soft FM. When I talk about soft FM, I'm talking about cleaning, security, open space management, and also catering. But what we really like to do is get into this space where we're delivering integrated facility services. And for us, that's the combination of both. But importantly for us, we are then delivering frontline services. And in the case of, say, a hospital, we're responsible for allied health and some assistant nursing activities. And so that's a place where we feel like we have a significant advantage in what we do and how we do it. So the assets which we service and have responsibility for. If you just turn to the opening page of your pack, this is one that I often go to because it really does show us as a core part of the urban services strategy. It shows the number of assets which we can touch, the diverse nature of those assets, and importantly, fitting with the group strategy, one of our customer groups are the executives who you've spoken to today. So that's a really neat thing for us in terms of the integration of the Spotless business into the broader Downer context and being able to articulate what we do and the value proposition that we can bring to our customers. Right, so looking at our key markets, I've described to you the sort of the different types of services we perform. What you see here is government, health, education, defence, and also industrial. Now, what we've seen over the last little while is once you have positions in each of these areas with your customers, you are able to deliver more. So in the context of government property, we have been able to support government in recent times with the engagement of our industry partners to deliver trade-based services, whether it be plumbers, electricians and what have you, to provide stimulus work to portfolios of assets. And a really easy example to talk to is in the case of Community Housing and Social Housing Commission flats and apartment buildings. And so you have these contracts. They are what we were referring to before as sticky. They don't have a very high element of discretionary revenue attached to them. The service needs to be performed. And then when opportunities arise, you have then the ability to scale up and provide solutions quickly. And that's the case in very much the soft FM space, where we've been able to respond to the COVID crisis on behalf of governments and health agencies to deliver COVID cleaning in open space management, the higher standard of infection control in public spaces, and then also to create programs for people to gain employment during COVID because of their displacement from affected industries. And that's been a really successful one for us. Now, government portfolios, just leading on from what I've just provided the overview on, this is really what I'm talking about in that space of hard FM. And we are one of those unique service providers that has contracts in nearly all of the states. And we've seen a trend where governments are either going from greenfield to first generation in terms of their requirements for the maintenance of assets, or we're seeing governments bundle up smaller regions and then allow us to bid and deliver much larger packages of work for them. And that's a trend that we're seeing at the moment in some of these pipeline opportunities. If you look just down the list here, we've got, at the moment in South Australia, a very large contract to provide services for government buildings, and we're providing services in one of the 3 patches. The other 2 patches are being delivered by an in-house government team. Now, we're in the process of bidding that and hopefully being able to expand our remit so that we can apply all of the insights that we have on their existing asset base in health and education into their other commercial government buildings. And that's a really exciting space for us to be. Now, in this space, you know, what are the competitive drivers? What are the types of contract conditions we work under? And what are the tenures of these contracts? So, first and foremost, to be able to deliver these contracts successfully, you really need to have the data insights. And across all of the Spotless business, we estimate that we have about 2.5 million assets under our control, which we touch regularly or touch as part of a portfolio of responsibility. And in the case of these government assets, they are what you'd call the less sophisticated type. So the building systems aren't that unique, but there's a heavy focus on compliance maintenance, planned maintenance, reactive maintenance, and then of course some project work. And the reason why that's important for us is that at the moment there's a lot of pressure on governments to get their statutory compliance maintenance up. So you think about what needs to happen to make sure that assets are safe and compliant with regulations, particularly around electricity. The other point to mention here is that you've got governments who don't have a lot of insights into these assets where we do, because we've been looking after these assets or similar ones for a very long time. So that gives us a great opportunity to go in to provide the insights into the conditions of the assets, undertake the planned maintenance activities, but more importantly, be able to propose projects which will make the end user experience better. And that's really what we sell in this class of contract type. We're often dealing with end users, so in the case of a government agency, we're dealing with social housing tenants or departments and that type of thing. Public transport, we touch the end user. So it's really important that we're able to provide those insights and a point of differentiation. And that's really the focus of how we deliver the contracts at the moment, using our data, using our delivery partners. So in the contracts that we've got mentioned here, we've probably got somewhere in the order of 5,000 delivery partners. And what are your competitive advantages? It's access to having really good buy rates, because that is a point of differentiation. How do you get your buy rates? You have that by having the volume. And we have a very large footprint, a lot of scale. Our other point of differentiation here is a really important one, and that's around safety. So being able to provide that safety and quality overlay to industry partners who may range from electricians all the way through to more sophisticated maintainers of plants like boilers and other cooling systems. And that's where we believe we've got an advantage. Our competitors in this space, you've got the likes of Programmed, Broad Spectrum, now Ventia. We're the largest, and we believe our safety record, really is a standout, and that's one of those things that we talk to our customers, more and more about. So if we move through here, what I should say just about that asset class is your contract types are very much in that sort of 5, 6, 7 year range, and you go through competitive processes. However, on the way through, you get a lot of opportunity to improve your service delivery and also your margins because of very opportunistic and reactive requirements like you might see during COVID. Customers need more. We need to be quick to mobilise, and we can get to quietly accumulate our volumes. And just recently, in the case of the New South Wales whole of government contract, we're actually performing work in a competitor's patch because we were able to mobilise a team that could undertake a roof replacement program safely, effectively, with the scale and the right oversight at the right cost. Now, they didn't like it, but that really was a feather in the cap of our team who delivered that project on time and replaced some 7,000 roofs really, really quickly and effectively. We've also been able to accumulate other patches. So in the land and housing contract, I think we've got 3, And we've just picked up another one because there was a service provider who just wasn't cutting it, and we were able to go in there and use our track record that we've been able to build over the last little while around our quality, safety, and the fact that they can rely on us and the relationships we've built with the stakeholder group. So then, in the single service line specialisation, what I'm talking about here mainly is in that space of soft services. And cleaning, security, our competitors in this space are the likes of ISS. We come across others. We've really distanced ourselves from that part of the cleaning market where you're looking at assets like shopping centres and those places where it's a race to the bottom. Where we really have our advantage is in the delivery of cleaning services to large portfolios of assets. And an example of this is in Victoria, where we, I think, have 300 schools. And we've got a workforce of around 1,200 people. And we go around and we provide output-based specification cleaning solutions, again, for the department. But our stakeholder group are students and teachers, and we've been able to build really good relationships at all levels of that. And so when the COVID crisis hit, we were then able to really almost double the scope of that contract, because we had the insights around infection control and the mobilisations of very large workforces. And that's, I think, really where this business has shifted, and there's not a bad pipeline of work for that to continue. And we're much more selective about where we go for things like cleaning and security. And in the case of catering, we will always be a catering provider as part of our integrated services and as part of our soft services. But we have a place in that chain where we provide scale, and we're able to integrate those services, hopefully, with other things that we do. And that's very much our strategy around the delivery of soft services and catering and hospitality in particular. So when you look at some of these other items mentioned on this page, what you're talking about is labour and the utilisation of that more effectively than others. So we always talk about, FTEs. What's the FTE? What's the cost of a meal that you're preparing in a hospital context? And we've been able to bottle that up. And so you take all of these insights from hard FM, from soft FM, and then we get to this area here, which is the slide's headed PPPs, but what we're talking about are integrated services. PPPs are a space where we do a lot of that integrated service, but another example is in the estate management contract we have for the Defence Department. And so you take all of those leading positions and insights that you have around planned reactive preventative maintenance regimes, the cost of a meal, the number of cleaners it takes, utilisation rates of cleaners, your ability to onboard personnel quickly and then provide a very safe place to work for your people who are frontline workers, who are considered sometimes to be more vulnerable, and also then in relation to delivery partners who you need to bring in to service some of these assets and provide that quality overlay and to ensure that they're working safely and effectively at all times as well. And that's really where we get excited, in this PPP space and the really long dated contracts. And you saw a slide earlier where we had $13 billion work in hand. And these are really long dated contracts, anywhere up to 30 years in duration. And we've got 19 of these contracts at the moment which touch social infrastructure, health, education, defence, and also justice. And it is a unique position for us to be in, not only to get great insights on how core building systems work, how asset life cycles for these assets work, but when you go to bid the next generation of them, and there are a number of significant PPPs coming to market that I've just mentioned on that slide there, you've got an ability to bid these contracts with certainty that you can deliver them, because they are very KPI driven, and you need to be able to understand what you can and can't do. And so over the last few years, we've been really clear in our governance and the processes which we've been able to take from Downer on the things that we can deliver with certainty. And we look at these PPPs and we partner with the equity groups that we know that will give us the support to actually put forward a good solution, partner with the builders who will come up with those innovative design solutions that government departments will be looking for. And how we're going in this space is quite interesting. If you look at the formation of consortia, I guess we do have the pick of the partners in a way, because we are the only one to provide that integrated solution. Lots of other providers either only provide soft services, hard services, and have to outsource that technical capability around asset lifecycle, whereas we have that native capability in everything that we do. Likewise in that hard FM space, whilst we don't win everything, at the moment we're shortlisted as one of two proponents on all of those things that we've put in there around field service and those contracts for outsourced government maintenance. So that just says that we've got a different competitor bidding against us on those shortlists, but we're key amongst it in every case. So we won't win them all, no way, but we should win more than our fair share because of those kinds of metrics. And I should just say in closing, in the PPP space, you need to have domain expertise. So whether it be health, you need to understand nursing environments, you need to be able to deliver assistant nursing services, understand how these operators of the hospital work, and that's another one of our core capabilities. Now I'm going to finish up finally on defence. And defence is one of those areas where Spotless does in fact have a very good brand recognition in that EMOS space. So we've been providing estate and garrison services to the Defence Department for over 40 years. And again, soft FM, hard FM, and the more sophisticated technical maintenance. That contract, it's a long-dated contract. We were awarded a two-year extension a little while back. That'll take us out to 2024. And one of the standouts for us is being able to use the footprints on those bases to deliver more work. And we've slowly been putting more people on to deliver estate development upkeep, estate development projects. So that might be the design and the oversight in the delivery of some small buildings for the defence group. It might be repairing hail damaged hangars, so varying degrees of technical capability, but we're quietly accumulating all of this work without going to tender. And that's something that has been a real success story for the defence team at Spotless. And then also working very closely with our asset services team, working with our transport colleagues in the identification of other projects where intimate knowledge of the customer is really important. And working, on that Williamtown upgrade team with Mark's colleagues, that was a success story for whole of Downer. And likewise, we're shortlisted at the moment to be the partner for Defence Fuels. Now we're in a joint venture there with Viva Energy, and so that contract would see Viva provide all of the fuel, and then Spotless provide all of the on-estate refuelling, and then with the asset services team being able to provide upgrade services to that defence fuel infrastructure on defence sites and also at terminals and everywhere in between at the refuelling points. So there are many examples where we've been able to work together and will continue to work together. The last example that's probably worth sharing, as the transport team deliver more rolling stock into the network, as Keolis Downer picks up further franchises, the facilities team are there to perform the cleaning, the security, and also the maintenance services. So when you saw all of those rolling stock networks and franchise contracts on the screen earlier, we are the provider of those services for nearly all of them now. And there's a great, I think, story there when, using the COVID crisis to be able to move out of things that are really tough, where it's a race to the bottom, where customers don't value what you do, to those much more long-dated contracts where transport can't stop. You need to be able to continue to keep up with trends and make sure that you're competitive. And that's really a place where we've been able to do very well. So I think that's about it for me, and happy to answer questions that you may have. Thank you. Okay. I might not have any, so I'll stand up.
Right, so who would like to ask Peter some questions about the facilities of the Spotless business? John Purtell.
Thanks, Peter. Just had two questions, and you've probably sort of part answered the first, but just in terms of if you can comment on your win and renewal rates over the last 6-12 months, how has that changed versus a couple of years ago, and how happy are you with those metrics?
Yeah, look, I think on the renewal rate, we don't lose contracts generally. That's a really big event if that were to happen. And I think the comment I made about being able to grow within the contracts has certainly been a feature of Spotless over the last few years as the quality of our work has increased and the relationships have got closer and the confidence in the customer base. And we continue to deliver more variations, in nearly all of those contracts which I had mentioned up on the screen before. In terms of new wins, I think a feature has been opportunities shifting out to the right, but governments, have now got to that point where we've got line of sights on, getting down to the last two, or government agencies going out now to get on with their outsourcing because of budget pressure, or because they're wanting to consolidate existing contracts as well. And so I think over the next 12 months you'll see a lot of activity in that space, and as I said before, we really do hope to win more than our fair share of them.
And just reflecting on Spotless over the last few years, obviously a lot of work gone into what you'd probably say to broadly stabilise the business.
Yep.
Do you think you're now at a point where you can sustainably grow this business from here, that the work's gone in and that the platform's sort of been established?
Yep.
And, how should we think about the potential growth profile of the business? Can you give us a couple of metrics in terms of how you may characterise that?
Yep. So look, I'll stick to sort of more qualitative comments if that's okay. So I'd agree with you, the work's been done. I think we're in that space now where we're more predictable in what we do. We've spent a lot of time building our pipeline. We've spent a lot of time, tightening up our governance, which may not have been best in class prior to acquisition. So, we are at that phase, I think, which is really exciting. In terms of future growth prospects, there will be, plenty of outsourcing, but I don't think you'll see a rocket ship. You will see sustained growth over a period of time, and you'll also see the benefits of further integration of Spotless into Downer. And we will be really overt in our use of the Downer brand, and Spotless will become a valuable subset brand, but we identify as Downer, and with that we get opportunities to become closer to the business units that you've heard from today. So I'm really, really confident that we'll see a good growth path into the future.
Thanks, Peter. One of the things that Grant talked to when Downer bought Spotless originally was the ability to transform its cash flow generation capability. Can you talk to what you've done in that respect, please?
Yeah, look, I'll keep this very sort of qualitative, if that's okay. But really linking in with the Downer finance philosophy, and there are some disciplines which have been put into the business that again may have not been the best around prior to acquisition. So that's been a large part of what we do. I think in recent times you've seen good cash conversion because we have been seen as an enabler of industry participation and the delivery of stimulus. So customers have been paying very well, and that allows us to pay our delivery partners well, and speedily as well. So I think Michael would have spoken in the past around conversion metrics and all the rest of it, and I think we'll continue to see that being pretty good.
Any other questions for Peter? Sure. No. Righto. Thanks, Peter.
Thank you.
Okay, now is the part of the day where we rely on technology, so that will hopefully work. So Steve Killeen, CEO of our New Zealand business, He will be coming in, here he is, from New Zealand. We thought it might be a bit risky, fly him across. He might have been staying in hotels for about a month. So he's sitting in the Kerrs Road office in Auckland, ready to go. So there you go. So I will not wait any further and hand over to you, Steve.
Thank you, Michael. Am I coming through loud and clear?
Yes. Yes, you are. Yes.
Perfect. Good afternoon from New Zealand. As Michael said, my name's Steve Killeen, 16 years with Downer in New Zealand and Australia, 30 years in broad infrastructure services, both contracting and consulting, just over 4 years as the CE of New Zealand. I guess with a bit of travel under my belt, you learn that every geography you work in, you assume some of the characteristics. And it's true to say that Downer New Zealand has the characteristics of a typical Kiwi, which is a good sense of humour and a strong sense of humility. And one of the challenges of telling the New Zealand story is we often underestimate the impact we have in our communities, our industry, in the Downer Group, and very often the impact and benefit we can bring to investors. So I'll try and break that tradition today and tell you the positive story of the Downer New Zealand business, which I think is often underestimated. So if we talk first about market position, so we've been around in the country since 1870. So by now you'd expect us to be the market leader, and we certainly are, being New Zealand's largest provider of infrastructure services. We operate in 3 distinct divisions, albeit interrelated. So transport, utilities and facilities. And we're involved in the whole of life asset cycle, through creation to maintenance and where required, operation of facilities for our clients. I think it's true to say that we're positively, So we're positively positioned in terms of work in hand, and what we've seen in the last couple of years is that's becoming quite repeatable. And in terms of the future pipeline, we're seeing plenty of opportunity in what I'd call our focused area. So I use the term focus because we have a general market size, and then we have a market size that we can access with the skills we currently have. And then we have our preferred space based on customer type and based on contract form. So this represents the opportunities in the 37.7 billion that we believe are very favourable for our skill set, but also for favourable outcomes for both the business and for our clients. And I'll discuss that further through the presentation. You do see there the market share percentages. Always a difficult thing because this is based on the general market rather than the focused area we choose to play in. So in the main, we are slightly stronger in our focused area than these percentages suggest. So very favourable position in terms of the market. Before I talk more about the customers, I'll come on to slide 2, which is the strong market. So I guess whether you're in New Zealand or anywhere in the world, being in infrastructure and the services related to it is a good place to be, largely because there's been intergenerational underinvestment. We're seeing population growth and population expectations, which are raising the demand. Increasingly on top of that, we're seeing high demand now for stimulus spend to help with the broader economy. I think it's no mistake that our finance minister, Grant Robertson, is also the infrastructure minister, because increasingly the needs of infrastructure, the maintenance of infrastructure, the spend on infrastructure to sustain stimulus and growth are becoming interconnected. If I take a couple of examples, firstly, our water sector. So our water assets have been heavily underinvested in. That's now been recognised by government, and our local authority minister, Nanai Mahuta, is reforming the sector. So we will go from local authority control to a smaller number of designated bodies controlling the maintenance, repair and renewal of our water assets. That will, based on the current asset condition, double the spend in the next 30 years comparatively to the past 30 years. So we're going to see a doubling of investment to tackle what has been historic underinvestment in that sector. Likewise, we're seeing increasing investment in our social infrastructure, particularly in education and health, which again, if I take health as an example, typically we've been spending on maintenance and renewals something like 500 million a year. What we're seeing is over the next few years that rise to a peak of about 2 billion a year. So all of this is adding to the demand for infrastructure, both in our maintenance activities, but also in our renewal and creation of new assets. I think probably the other thing worth mentioning in terms of the market is a shift that's very favourable to our type of business. Firstly, in terms of a whole of life consideration. So we're seeing clients look not only at the creation of assets, but also on the ongoing maintenance, and very often now looking to link the two together. So whoever the party is that creates the asset with them will maintain it whole of life and will certainly act as a strategic partner in the operation. The other things that we're seeing, particularly in the government sector, is a link between the infrastructure work and the social outcomes desired. Whether that's social outcomes in terms of closing the equity gap in society, or whether it's the outcomes in terms of environmental pressures and obviously responding to climate change. So that probably brings us neatly on to the customer relationships. And I think this is a flavour of New Zealand and the Downer New Zealand business, that we have robust and long-term customer relationships. In terms of picking up from Grant's initial opening, 90% government, that's perfectly consistent with the New Zealand business. We estimate our local and national government clients account for about 90% of our turnover. The balance is largely institutional type clients, be they listed or consistent with a strong government ownership, whether that's national or local government. For example, our ports and airports generally have a government interest in them. Likewise, our energy generation businesses generally have a 50-51% government shareholding. Characteristic of the customer base, in addition to that long-term relationship, is we're seeing more clients move towards long-term collaborative contracts. And when I say collaborative, there's three categories of that for me. There's an early contractor involvement, where you're identified as a preferred party. You work with a client through the detailing of the project or the service, and you define a price that both parties agree on under acceptable terms and conditions. Alliances in a very similar way, but you continue to share the financial risk of performance of the endeavour, or sometimes just as simple as negotiation, where the client goes, we want to work with you, Downer. We're happy with the service we're currently receiving or have received in the past, and all that's left for us to do is negotiate a price and terms and conditions that are acceptable to both parties. A good example of that is our recent renewal of our water care contract. Water care look after water assets in the Auckland region, and we've just renewed a 10-year contract based on a negotiation process, where basically the client wanted to use us, continue the relationship that existed, and all we had to do was agree the appropriate price and terms and conditions. So I think that leads us quite neatly into a little video clip now, which will describe some of those collaborative approaches and how they're benefiting both our client outcomes, but also our endeavour as the Downer business.
City Rail Link is a game changer for Auckland. The 3.45 kilometre twin tunnel underground rail link, including 2 new underground stations, will significantly change the way people travel around the city, improving travel options and journey times and doubling the number of Aucklanders who live within 30 minutes travel of the CBD. This is a complex project, which is why an alliance delivery model was chosen by our customer, City Rail Link Limited. This relationship-style model enables a public sector agency to work collaboratively with private sector partners to deliver a major capital asset. Alliances are typically used for highly complex or large infrastructure projects that are challenging to scope and price. Downer is part of the Link Alliance, a consortium of 7 companies which are delivering the main stations, tunnels and other infrastructure. While the Link Alliance is a great example of Downer working with other global companies on a collaborative contract, it is also an example of collaboration within Downer. The project provides an opportunity to integrate our capabilities and deliver the best outcome for the customer. The infrastructure projects team is leading the project for Downer. Transport Services is providing a large amount of the plant works, routine maintenance works and small civil components. The Facility Services and Utilities business is delivering 2 electrical services contracts, and the Hawkins team is responsible for building the stations. In addition, Downer is also a preferred supplier to maintain the 3 City Rail Link stations for up to 30 years. Leveraging the combined capabilities of Downer to provide a complete infrastructure solution is a unique offering in New Zealand. It's a value no one else can provide and a more efficient value chain for the customer. CRL is a high-profile example of the One Downer offering. We are seeing more projects going to tender that provide similar opportunities for Downer to deliver an integrated solution, leveraging all of our capabilities. The alliance model has also been successfully used for other projects in New Zealand. Team New Zealand's victory over Luna Rossa to retain the 36th America's Cup on Auckland Harbour was a moment to saviour for all Kiwis. It was also a source of great pride for Downer New Zealand, which was part of the Wynyard Edge Alliance that turned Auckland's Wynyard Quarter waterfront into a set of bases and other infrastructure that enabled the city to successfully host the event. The New Zealand Government and Auckland Council formed the Wynyard Edge Alliance in 2018 to create a stage for the America's Cup and a waterfront destination that Kiwis love. As with all international sporting events, the date was set and the delivery was urgent. Given the extremely tight timeframes, it was determined the best delivery option was the alliance model, where a public sector agency, in this case the Crown and Auckland Council, worked in collaboration with private sector parties including Downer, Becker, Tompkins and Taylor and McConnell Dowell. At the time the alliance was formed, nobody knew how many teams were coming, where they would be located or how the bases would be configured. All parties were required to work collaboratively in good faith, acting with integrity to make unanimous decisions that were best for project. In December 2020, less than 3 years after the Wynyard Edge Alliance was formed, the team delivered the project on time, under budget and with zero harm to people or the environment. The Alliance delivered all key performance milestones on time and in some cases earlier than agreed dates. This was despite the disruption from COVID-19. We achieved more than 1 million man-hours with no lost time injuries, a rare achievement driven by strong zero harm culture. Just as rare is to complete a project of this scale under budget, but this was achieved thanks to innovation and collaboration by all partners. We also achieved some outstanding sustainability outcomes. The works have helped transform the contaminated section of Wynyard Point into a public asset with low maintenance lifespan. All marine assets installed by the Alliance have been designed to allow for sea level rise and constructed with minimal environmental impact. The Alliance also formed early and enduring partnerships with local stakeholders and with Mana Whenua. This led to minimal consenting issues and formed relationships that created success for all involved. With little margin for error, the alliance model needed to work, and through cooperation, collaboration and innovation it did. The Alliance turned a brownfield waterfront area into a functional event space and a platform for Auckland's future growth.
Okay, so back on. So just looking now slightly deeper into that client base, because I think this is one of our strong stories now and in the potential of what we can do going forward. So as we said, a lot of local government involvement, 20 to 25% of our turnover accounted for across the local authorities. And touch points with just about every central government ministry and department. And those relationships extend beyond contracts to relationships that weave us together in the long term. So, for example, our relationships with Ministry of Social Development and Te Puni Kōkiri, which is the Māori Development Agency, where we're focusing on training initiatives, giving people opportunity that need it, and creating career pathways in our sector. Also relationships with the likes of the Defence Force, particularly strong with New Zealand Army, again through training exchanges, but also in engineering disciplines such as Centre of Excellence for Bailey Bridge construction. And it was only last year that we responded jointly with the Army to a bridge collapse on the west coast of the South Island. So a relationship there that's extending, as I say, beyond contracts to actually embedding ourselves in the fabric of the country. I guess also in terms of the customer base, so if we go to the next slide, as discussed, a lot of our work that's not with government is with government in one form or another, be it the ports and airports where governments are a big shareholder, or in other educational institutions in the tertiary space. Currently doing projects for both Auckland and Waikato University. I think on there also Precinct Properties, New Zealand listed development organisation that own their buildings through whole of life, where we build for them, but we're increasingly doing maintenance operations, and we're just talking to them currently about maintaining their electrical and mechanical assets on some of their existing new buildings. And then we go to the utility space on the next slide. So the most comprehensive utility service in New Zealand, and all under one umbrella in our organisation. So great to see us doing power distribution, gas and water reticulation, and providing telco services to both Chorus as a wholesaler, and also Vodafone and Spark and other retailers. So really embedded in that utility space. And as we see local lines business open up for competition, increasing opportunities for growth. And this year we'll also see the transmission contracts open up for tender, and we'll certainly be lining up to be in the mix for that going forward. So final slide for me on the New Zealand business before we go into questions. And it's really about sustainable growth. And I think it really talks not only to the New Zealand business, but also to the Downer Group business, that we have a much greater clarity in our focus of what we do. And in doing that, we're able to combine those capabilities into a dual offering. And I think this works in a number of ways, but firstly, it's through whole of life. So it's combining our capabilities through the life of the asset, going from creation to maintenance to operations. And our utility offering supports that across our portfolio. So whether you are in transport or you are in facilities, you cannot now do the work without the ability to provide the power and the comms backbone to that activity. So as we move away from the concept of road and rail and we move to the concept of transport corridors that connect assets, connect communities, power and comms will become to the fore, and we will need to integrate technology with hard assets. And we're perfectly placed to do that. I think also in identifying those technology levers and being front of the queue in terms of how that will work, in terms of the management and development of assets, we're very well progressed. So if I look at technology as an initial enabler, one of the things you see on that second picture there is something we call mobile mapping. So that's capturing 80 kilometers an hour survey accurate data that can effectively be then used in our building information management or our asset information modeling. So that takes people out of the danger of the road corridor or the transport corridor. It allows us to capture information, and it starts the mapping of the digital asset. We also see that then going into the building information or asset information modeling, which is then used to fine-tune design ready for build and delivery. During delivery, we're seeing the ability to combine technologies, be it geo-fencing of assets to improve safety, or product selection to make wiser choices for sustainability in the long term. And then obviously all of that information capture going into the maintenance and operation of the asset. So effectively linking that whole of life digitally through the life and becoming more valuable to the client as a whole of life partner. The final point on there, and I refer to rail, but it really talks to the earlier points made that some of the best impacts we can have, both in our relationships, but also to the environment and sustainability, is the expertise we bring to clients. So in the rail space, two examples of how we in New Zealand can leverage the broader capability of the Downer Group. The first one's some work we've done with Kiwi Rail, where we've basically looked at their locomotive fleet in the North Island. We've come up with suggestions of how new technology can reduce their carbon output. So basically looking at their 2050 targets, looking at how we can capture the latent energy from braking. You can imagine the topography in New Zealand is very undulating. We can capture the energy from braking and translate that into less diesel usage, less CO2 outputs, and therefore a success story both financially but also sustainability. And we're working on that with our Australian rail team at the moment in partnership with Kiwi Rail. Likewise, we've engaged with government on light rail in terms of our expertise in Australia, both through Steve's business, Mark McKay's projects business, and also Keolis Downer in how we use that for benefit. And even in more basic processes of material production, leveraging off Dante's work to ensure that we're taking the knowledge that's involved, for example, in recycling hard plastics in asphalt and translating that to a New Zealand business, which we've done successfully recently in New Plymouth. So lots of examples of how we can take the whole of life, the technology connection, and the broader Downer experience to strengthen our relationship with clients, but really make the most of what the Downer offering is. I think that's pretty much a snapshot of New Zealand. Not too humble, I hope, and now open to questions.
Yeah, look, thanks very much, Steve. So I'm very pleased to say the technology seems fantastic, so we can hear you very well, and any questions asked from the floor, Steve will be able to hear them directly. So as you heard at the beginning, New Zealand is a significant part of the Downer Group now, has been for some time, but here's the opportunity to ask Steve questions directly about New Zealand. I think you'll hear the questions directly, Steve, so I'll just let you.
Thank you.
That's me. I'm the guinea pig. Okay, hi Steve. I was wondering, you've mentioned just at the end there the ability to utilise capability from the Australian group into New Zealand. Where do you believe that the New Zealand group leads, and what capability do you think Australia can use from what you guys are doing?
Yeah, thank you. I don't like to say we're a humble bunch. I think
Australians generally aren't, so you're allowed. You're in good company.
No, I think probably it goes to that integration. I spent some time in the Australian business, and it's fascinating the depth of skill we have there. One of the challenges with scale is sometimes it's very hard to bring it to bear collectively at the same right place at the right time. I think because of our smaller nature and the fact, I guess we have absolute visibility of what's going on where, we're able to do that in a more agile way in New Zealand. And you know, the minute one of our businesses is in a space at the front end of an activity, it pulls through our other activities. So by way of example, our telco business that specialises in telco assets has done a great job at bringing our building capability into that client base. So they advocate for other bits of the business. Likewise, where our building arm is building the hangar for the new Orion planes for our Defence Force, there's an immediate conversation about our facilities business incorporating that into their maintenance activities on that base at Ohakea. So we've got great agility in our businesses knitting together to offer the clients a more integrated offering and a longer term offering, really. So we look at everything as a relationship, and we look at everything of most of our clients, if they want one particular activity, they probably have a need for more, and we've become very successful in integrating that. So I think that would be the key one. And my observation is, through the dialogue between New Zealand and Australia, we're doing that effectively now between the two countries. And I think from what you're hearing today with my colleagues over there, there's increasing awareness and increasing examples of how that's starting to happen in that bigger Australian market, which I think is huge in terms of how we differentiate ourselves from our competitor base, who very often can only offer one particular skill set or can't bring the skill sets they have together.
Great, thank you.
Any other questions for New Zealand, for Steve in New Zealand? I know it's been a long morning. None other? I think you've covered off.
Cool.
Sorry? Yeah, it is. Look, thanks very much, Steve. Technology worked really well. So thanks very much, and we'll speak soon.
Thank you all.
Okay, now, so I think what we'll do now is I'll get Grant to come up and make some closing remarks, and then you do have there will be, a few opportunities to ask him a few final questions before we go to lunch. But yeah, do take the chance to ask him questions.
Thanks, Mike, and thanks everyone for sitting through this morning. I think it's been a great morning, and thanks very much to the people who've presented. I think you've done a great job and stood the company up well. Thank you. Look, having gone through the presentation and listening again to the business, I've got to say, I just come back to the first point that I made when I stepped up here. This is a truly great Australian company, Australian and New Zealand company, and you just can't get away from it. From the things that we do, how embedded we are in society and making it work, the fact that we're Australian, New Zealand led, just really is terrific. So, I'm very proud of this business. There's three other questions that I think you've probably been pondering in your mind. Hopefully we've answered them today. First one is really, are we in the right markets? I think from what you've seen here, the opportunity pipelines, how we're positioned, where we are in those markets, I think the answer to that is yes. Pipeline opportunities, growth potential, there's a GDP plus diversification, resilience, contract tenure, pretty good. So the next question that comes to mind that I think we have answered here, and the question here is, can we leverage our position in these markets for value creation? Again, I think, having listened today, I think the answer to that is yes. Why? Because our market positions are very strong. We have points of advantage, we have scale. In many cases, we've got vertical positions, which are very hard to replicate. So we can create that value. We have opportunities for growth, and that's just not organic, but also acquisition. And the third one, which we didn't spend a lot of time on today, but I can assure you we spend a lot of time on it. And that question is as well, okay, well, you've got all that going for you. Can we manage the business effectively and sustainably? You heard from Julie, certainly on the sustainability front, we are market leaders. For very good reason, you have to be. It's so relevant today. We've seen, certainly, and just from a capital allocation perspective, before we even think about the things that we're actually doing from a capital allocation perspective, we've seen it move very, very quickly. But we have to be good in this space, and we certainly are. I can assure you on the few other things around that managing the business effectively, we have very strong contract risk management processes. We think we've got very good reward structures. Our zero harm effort within the sustainability front, again, is fantastic. We have market leading lagging indicators. So we've heard people today talk about total recordable injuries and lost time injuries. We lead the market here. There's a good reason for it. We spend a lot of money, a lot of time, and a lot of effort on it. But it's important because it's important to our customers. And then, of course, you also heard a little bit about the TDS, so the Downer standard. What are we doing about making our business, the quality side of that always being good, how we manage talent. So, again, I just back to the position that this is a very strong position. We're very happy to have you as either financiers or investors, and I'm looking forward to the next time we get to speak. Hopefully that'll be before the next Investor Day, and we'll see you around the traps. So.